Welcome everybody. First things first, as always, if I could just please get a quick audio visual check, please. Let me know if you can see my charts clearly and hear me all right. How are you all doing this fine day, wherever you are out there? And after a confirmation, so I just know I'm not talking to myself or accidentally have myself muted or anything, we will move forward. Hopefully you're all having a fantastic day so far. Sun is shining here. It's beautiful. But I figured that, you know what, before I go enjoy that sun, I'll at least do a little bit of a stream here because you guys, this might be a little bit of a breath of fresh air for a lot of people. I know that I have basically been a perma bear for months, and honestly, I still have my concerns, but there's a few bullish scenarios I want to go over today as well. So volume is good. Perfect. Full moon pump. Maybe. You know what? It's a possibility, right? All right, guys. Well, thank you guys. Thank you for being here with me. Although, like I said, you guys know my overall thoughts on this market have been quite bearish recently. Today, as I said, maybe a little breath of fresh air because I have at least got the attention of the bulls at this point. None of my red flags have actually been invalidated yet, but I'll give credit where credit is due. So I do want to talk about a few bullish things, but of course, a few things that we should still be cautious of moving forward here. So with that, I want to hop right over to the 4-hour chart. You guys know that I have been following this 4-hour structure quite religiously at this point, and my 4-hour structure has not changed, right? While I was out on my snowboard trip there, we actually ended up getting another bearish structure break to the downside here, setting this lower low. So unfortunately, this pump that we have so far, it really doesn't mean anything to me yet. Like I said, yes, it's got my attention, but no structure has broken for the bulls yet, in my opinion, because we just have, just looking at the chart, how I've been laying it out as we've been going, we've set this low. Now we have a new lower low. That means the highest point between the two is my confirmed lower high. So I'm basically looking at this Fibonacci pull as the range that I'm currently watching, and we're getting very close to my 4-hour resistance here. You guys, the reason why I say this has actually got my attention at this point is now, I mean, I am very interested in starting to build some short positions at these levels, watching the shorter time frames and stuff like that. But the thing is, guys, the bulls have not really been able to even get us up towards these resistance levels in previous swings. Even just looking at this previous swing that we had back here, notice that we never did get up to my purple fibs here. We ended up getting stopped a little bit short. So basically since January on this 4-hour trend, whenever we get these bounces, these relief rallies, generally speaking, they have not been reaching my 786 Fibonacci. Which is basically the start of my levels of interest. Not that it hasn't got, I've hit some levels of interest where when we had shorter time frames breaking out, then we started getting bearish Stuber fibs, but it was always happening earlier than the Stuber fibs on the 4-hour. And so that was a great deal of weakness, in my opinion. So the fact that we're actually getting up now, basically testing my 786, we haven't seen this much strength in a reaction rally for quite some time. Again, the red flags have not broken yet. We have not broke structure yet. I want to be very clear about that. It always feels like there is a ton of strength in the markets as we get towards resistance, just like it feels like there's a ton of weakness when we get to support. This rally that we've had here, the reason why I say it doesn't really mean anything to me at this point is because we had this bearish structure break. And like I said, the highest point between the two is my confirmed lower high. And the fact that we have not broken that yet, the structure has not changed. So I still have to be cautious at this point. I still have to favor the downside a little bit because that's what structure is saying. And on the longer time frames, I have more of a concern with that. But again, I do see strength, just the fact that we even got up to these levels. So that is nice to see. Does it make sense that we would find some resistance in this level? From a naked chart perspective like this, yes. You know what? We have our lower low, we get our retracement. That's very normal on a 4-hour chart like what we're looking at right now. That's very normal on a 5-minute chart, a 1-minute chart, a weekly chart. It's very natural for any time frame after you end up breaking structure to get some sort of a retrace. And that's the whole reason why I even pull Fibonacci's, right? That's the whole reason why I came up with this Stuber Fib strategy, is because rather than just playing into a breakout, you're more so waiting for that retracement to get your better entries. So if this downtrend is going to continue with a series of lower lows, we should be starting to see resistance basically between where we're at right now and our lower high around, call it 88.8K. There is even a little bit of wiggle room for a liquidity grab. You guys know when I pull my fibs, I like using the 115 as my invalidation. I do leave a little wiggle room past that, but that's kind of the general idea, is that as far as a swing fail, if we were going to test this lower high resistance, but just end up getting a fake out, something like that, that's basically what this area is above our lower high up to my 115. That's what that's allowing for basically. So as it stands right now, yes, the markets look strong. The bulls look strong. However, like I said, we still have structure to the downside. I want to zoom out to the weekly chart. Now, honestly, the weekly chart has got my attention too. You guys know I've been very, very vocal about this downward sloping resistance line on my RSI on the weekly chart. This is basically what led me to be bearish at the all-time highs. When everyone was telling me I was crazy, that's the exact signal basically that made me to be cautious at this point, basically, and getting very bearish when we did, in fact, confirm that bearish divergence with a double top like that. So the fact that we're now, after several touch points, starting to look like we want to break out of that trend line, that would be a big green light for me. That would be at least breaking one of my red flags, if nothing else, right? And since I've felt so strongly and so bearish about that line, when that breaks, that is a huge weight lifted for me. I still have a few concerns after that, but that is a big one that could be basically invalidated relatively soon. This weekly candle still does have a little bit more than 1 day, so anything can change, right? I do not consider this line is slightly above my red line at this point. I'm not considering it broken. This candle has not closed. Both these times right here in this area here, there was 2 candles that I remember specifically at the start of the week. They had broken this trend line, and then they ended up getting rejected later in the week, and it just curled to the downside. So that could still happen now, but it is looking good. It is looking like tomorrow we may break one of my big concerns with the macro trend in this market. I would love to see that. As well, we have this little bit of a downtrend line. I would like to see this candle close above that. And then if we could start respecting this diagonal trend line, this old resistance as support, that would be beautiful to get some sort of a nice move to the upside. It also looks like with my Wave Master indicator, it does look like it's starting to get ready to print some sort of a bottom signal here. So that is a nice momentum indicator, just like up here near the top where it printed this reversal, this bearish reversal there. So I would love to see something come into play here while we end up breaking the RSI as well. That would just be some nice additional confluence, right? Here is my big concern, you guys. Honestly, at this point, the monthly chart. I know I've been bringing this up more and more on my streams recently. Before, it was mainly the weekly that I was concerned about. The weekly's starting to look a little better. The 4 hours starting to look a little better. So it's nice that the shorter time frames are starting to flip over, but the monthly one right now to me still looks very scary. I shouldn't say scary, I guess exciting, volatile, whatever. This is still a big concern of mine, honestly. Just the fact that I see 3 reasons for a full-on bear market out of this chart. Not saying it has to happen, but it's just got my attention. Just like the bulls on the midterm have started getting my attention, the bears on the larger time frame on the monthly chart like this very much so have my attention, because if I just go with a naked chart, let's just get rid of my indicators, just looking at these order blocks, whenever we've ended up breaking above these order blocks, like here we had a bearish one, we end up breaking that, flipping that resistance into support, it was bull market on. Here we lost this support block, ended up flipping that into resistance, and it was the continuation of a bear market. end up breaking this bearish one, testing it as support, becomes bullish. We get our bull market there, and we have now got one of those to the bearish side on the monthly chart for this cycle. So every time we've seen a block like that get broken on Bitcoin's monthly, it has been a full-on market reversal. Okay, so it's only happened about 5 times here, but everyone has been a full-on reversal. So I have my concerns with that just from a straight-up structural point of view. Bringing up that wave master indicator. I know I brought this up in my last stream as well, but guys, this is the MDX wave master indicator. It is, again, a big momentum indicator. And every time this has crossed on the monthly so far, right, it does not have to happen again. But so far, 100% of the time when we've got a cross on this indicator, it has picked out basically perfect reversal points on the monthly chart. Absolutely nailed the bearish start here, the bear market, bull market, bear market. Yeah, we ended up going up and retesting that level, basically a double top, swing fail, whatever. But that was the big warning shot fired there. Same with the other side, right? Another bull market there. And now we've got that bear market cross again. And understand that this only confirmed less than 2 weeks ago, right? It's not like, oh, well, that's probably played out already kind of a thing. It's no, that just printed 12 days ago, basically when this monthly candle started or the last monthly candle closed, however you want to look at it. That is when that cross happened. So that is very recent, and that is concerning to me. I also like using this trend dynamic indicator. I love using these W's here. So those are reversal warnings. And just like many indicators I use, more so paying attention to when they change directions, when they have a momentum shift, anything like that. So the fact that right here, we actually got a double reversal warning, and it ended up printing a lower reversal warning, you know, rather than notice on the whole uptrend here, we had a reversal warning, a higher reversal warning, a higher reversal warning, another higher one, now a lower one. I have very large concerns about that because that is a very early trading strategy I made based around these indicators about 2.5 years ago. For those of you in the MDX ALGO community who are here with us right now, some that may look familiar to some of you guys from a couple years back. The only other time this has happened on the monthly chart is back here. And this was obviously a bear market starting as well. So it's not that it's happened a ton. That's the thing with the monthly chart, you guys. It's not like we have a ton of examples of these indicator signals happening. So take it for what it is, but it's just basically to pretend there's no red flags here. I just can't pretend that. But again, the shorter time frames, they're starting to look strong at least, but we are at resistance now, right? So now's the time where I want to start watching lower time frames because we are in my midterm resistance. We're finally getting to a 786, 886 fib pocket on the 4 hour. So I love to see that. What else can we find on this indicator? Does it make sense that we would have some sort of a bearish fib pull like this? Let's pull the ALGO master indicator. This prints automatic Stuber fibs as well. And notice that they line up with mine. So I love that as a second opinion like this. Just a little additional confluence to my setup that I'm looking at here. Trend master indicator. I know I've been talking about this for months now that I love looking at when basically right now I have a trend, a very obvious trend of lower sell signals, lower buy signals. And even though we have a buy signal right now on this indicator, it is still a lower printed one. So the trend is still technically to the downside, right? So if we are going to get another lower sell and continue the downtrend, I would basically, again, expect it to happen basically anywhere between now and, like I said, 88.8K is all fair game for resistance. And like I said, even a liquidity grab, some sort of a swing fail if we get it. If we got the price doing something like this, where we get a wick above that, a lower high, and then we get a retest, something like that, I would be loving to short that with a nice tight stop loss, because that's such a tight risk reward setup that even if the bulls do kick into gear and they do actually end up breaking and invalidating that Stuber fib setup for the first time in months, you know, at that point, whatever, take the small loss, right? That's the whole point of trading fibs and looking for retracements, is it really tightens up your risk, right? If I'm laddering into a short position somewhere in here, whether I wanted to ladder into a swing position or wait for a swing fail setup or wait for a lower time frame setup, whatever. I would rather be looking for shorts in this area here rather than being the people who are shorting late on the structure break down here and assuming that, hey, we broke support, therefore we're going straight to zero or just straight to whatever number they decide, right? Just straight to bear market from there kind of a thing. It's very natural to get a retracement. So I would always rather be looking for shorts on the retracement rather than into the breakout. Same with on the long side, right? If we end up, let's just clean this up a little bit. Let's just say that we do end up breaking that resistance. We invalidate that Stuber fib rather than long in and FOMOing long at these levels. And don't get me wrong, it could just end up being a breakout. But so often we get a structure break like that, and then we get a retracement. And on that retracement, that's where everyone would start getting very bearish again. But if we got this kind of a setup where we actually broke that structure and then came down here, I would very much so be looking to long that. I would feel much different about this level down here than I did back here, just because there would be an actual bullish confirmation of some kind rather than just trying to catch a knife. Actually waiting for some sort of a bullish confirmation. And that's basically your signal. Let's say that, Kate, you know what? We take out this lower high. I'm going to be bullish and I want to get into a long position at that point because breaking above this level, there's my signal. Hey, I want to be in a long position. That does not mean take a long position right now, right? Just because there's a bullish structure break doesn't mean we can't pull back and get a much better entry with a much tighter stop loss. So that's kind of the whole incentive of using Fibonacci pullbacks, right? And this is all kind of stuff that I talk about in my Telegram channel for those of you guys who are interested in trading based on charts rather than tweets and fundamentals and that sort of thing. You guys want to stay one step ahead of the markets based entirely on price action, no emotions attached, and you want more of my thoughts on the market in general. Do yourselves a favor and scan the QR code. There's steps in the description down below to get set up in there. Just kind of sharing my thoughts in general on the market, some of my trade setup ideas and that sort of thing. But even all this bearish price action, you guys, for all of us in there, the bearish price action that we've had should have not come as a surprise to you. Just kind of showing how I'm looking at Stuber fibs. Even here, you guys, even though I've been so bearish, even after making a very bearish video the other day, I ended up taking a long scalp and I even shared it when I took it. Just trading the charts for what they are and just showing how I pull those fibs. One of my favorite trading strategies there, how I look at structure and so on. Just basically, like I said, looking at structure for what it is. So also, guys, for those of you who are in my Telegram channel, those of you guys who are signed up, my partners at BloFin are giving my followers a special promotion right now, 20% cash back on deposits. So if that's something that interests you, do yourselves a favor, take advantage of that as well. For all of you guys who are already in the Telegram, who have signed up with my link, you should already have access to that. It should be automatic for any new deposits. So very cool there. That's another thing, guys, right? If you have any issues with BloFin, let's say you start trading there, anything like that, you sign up using my link, then I have quicker access to customer support and just any questions, anything like that, have connections there, right? And then we're also going to get some of their best promotions with trade volume, deposit bonuses, and all that sort of stuff. So yeah, definitely very cool there. Let's take a look at the shorter time frame just because it looks like we are getting rejected there. I am going to start a bit of a short. I should have been paying attention and taking it up here a couple $100 higher, but yeah, I'll start a little bit of one here. Because it's nice to see that the shorter time frame is at least respecting this, right? We tested the 786 and we got some sort of a rejection here. So the smaller Stuber fib we had here never did play out. It is possible we bounce here. What I would like to see, and especially that, so I know a lot of you guys, a lot of people who watch me and look at how I microanalyze shorter time frame may think that, you know, it is just microanalyzing whatever. But this is the type of structure that I really like to point out, where it looks, it's very micro, right? But we do technically have this little high and we went slightly higher. So we did end up losing this support for the very micro trend. Notice that all of these little stops along the way never had that. This one did. And then it ended up being a false alarm. We ended up climbing higher. But this structure break right here, as we test the 786, that's nice to see that little bit of weakness kick in. So even if we could get a pullback, something like this, if the price ends up going lower, I'm just going to kind of change the fib and chase the price. But yeah, basically that's how I would be looking at finding a new micro Stuber fib, basically one on a shorter time frame. I already did start a part of a position here, and yes, it's not my perfect ideal entry, but it is still very close to that 4-hour support. So I just want to at least have something in, and then if we climb higher, I can always add to my position, because I almost never go all in and all out in a position at once. Whenever I'm entering positions, I'm laddering into them. I like to put the heaviest part of my orders as I'm getting closer to my invalidations, because that really helps tighten up the loss, basically, right? And as well, I like to take profits along the way when I'm in a winning position. Whenever you know, I get a lot of questions a lot of the times where people will be like, Stu, I don't know if I should close my position or leave it run. Well, if you're ever asking yourself that, maybe it's time to start taking some profits, right? So again, I always like to ladder in and out of positions. Just me personally anyways, because if you're only swinging for home run trades, chances are you're going to end up getting wrecked. But also, if you do have the opportunity for a home run trade, you still want to be able to catch those. So that's where I always, and I know for those of you in my Telegram, this will be familiar, but you know, I love playing the range first, right? So I'll usually end up closing a quarter to half of my position while we're in whatever range that I'm pulling a Fibonacci from. That's what I mean, right? Like, let's say that this ends up bouncing and I would end up taking a short off the Stuber fib, for example. I would be playing the range first, right? Yeah, it's a very small profit taking on the way. But if I'm looking at that as a typical scalp kind of a setup, if that's the range that I have pulled, that's where my targets are. And I want to downsize my risk and I want to pay myself a little bit quickly. But then obviously, if we end up breaking out of that range, I want to catch that as well. And that's where laddering in and out of positions helps, right? Because then you can catch it with part of your position if it absolutely dumps off a cliff from here, for example. I wanted to take a look at a couple other things as well, you guys. One of them being Bitcoin dominance. Something else that has caught my attention from more of a bullish standpoint, right? Like I said, I've got bullish and bearish this video here, this stream. The fact that we lost this little uptrend on the Bitcoin dominance 4-hour. I'm looking at that as, you know, maybe altcoins are going to start seeing a little bit of a rally. I know we've seen a little bit of one already. There has been some nice green in the market the last couple days. But even Ethereum looks good, and that kind of caught my attention. So that's where I just started looking at Bitcoin dominance. So just if we end up seeing this dropping off a cliff here, then yeah, I think it makes a lot of sense that altcoins would be making a nice little run. These days, honestly, I feel like stablecoin dominance is a little more important than the Bitcoin dominance these days when trying to evaluate the health of Bitcoin, for example. Right here, so this is the 4-hour as well. Notice that the stablecoin dominance has been dropping and the price has been going up, right? Because a lot of the stablecoins have been going back into the market. One thing to consider with this is technically there is a bullish Stuber fib here on the USDT dominance, right? Because we have this high and this higher high. That means our lowest point between the two is here. If I pull a Fibonacci somewhere like this, There is technically some support coming up very quickly if this is going to respect a Stuber fib like this. So if that's the case and stablecoin dominance finds a reaction off this and starts getting a bounce and we start seeing money flowing back into stable coins, that's where I think that Bitcoin is going to start taking another tumble to the downside. But so far this is dropping to the downside and we have seen the price climbing. So just something to consider there. Like I said, with Ethereum, I know I'd pointed this out, well, I think it was several weeks ago, but Ethereum was actually testing the macro Stuber fib like this. And just look at that nasty rejection at that level. However, that being said, we have obviously reached my targets, right? We've hit my we hit my 0.5 target. We hit my 214 target. So the Stuber fib range has actually played out. And that means since the targets are hit, you know, maybe we're going to see some relief there for Ethereum finally soon. Also, if I pull a fib from the bottom here, look where we're finding support right now, right around that 786. So, you know, Bitcoin has not reached its 786 yet on the weekly that I've been watching for quite a while now. I don't know if it will for sure. But that's basically what I'm looking at. The one on Ethereum is actually a little bit bigger. It's a little longer time period. Well, actually a lot longer time period. But a very similar type of structure, right? Just basically a Stuber fib there. So the fact that it has reached a 786 and seen a bit of a support, just some sort of reaction rally. Again, just a little bit of a sign that, hey, maybe altcoins are going to have a little bit of a run. Also, if you know, let's just say my theories about Bitcoin on the monthly chart. What if this is correct? If let's just say that, you know, it's at least possible that this is showing that there could be a bear market that's taking shape. If that's the case, quite often at the end of bull markets, you see altcoins kind of get that one final push. You know, when Bitcoin is topped out and kind of traded sideways for a while, altcoins get that one last push. I remember it very specifically at this time in general. This one, the 20K market cycle top. You know, Bitcoin had topped out basically, well, between December 11th and December 18th. Within that week is when it actually ended up topping out. Whereas Ethereum in the same cycle, it was actually kind of the middle of January or the start to middle of January. So it was about a month later where it topped out, right? So something to consider there, that even if altcoins start seeing a crazy boom, understand that that may be one of those warning signs that this is kind of the last pump of the cycle. But again, we're going to have to see. Ethereum versus Bitcoin. This is another interesting one that I want to watch. I have this diagonal trend line. I actually want to put an alert on this. Just because this is a fairly nice looking diagonal trend line that if we end up breaking that, I would love to end up longing the retest. Let's say we end up breaking it, do something like this. If Ethereum is going to create that type of structure versus Bitcoin, I think it's very possible that Ethereum will big time outperform Bitcoin for at least a short-term period. And I would definitely be taking that into consideration. And I would be looking at playing longs on Ethereum aggressively at that point, at least for a short term. So just a few things to watch for there. SUI, this has been on my radar. There is this structure here with much like what I'm looking at with Bitcoin, right? We have our low, lower low, lower high. So I have a Fibonacci pulled here. We have not reached the 786 fib yet. Not quite yet. But if we do, same thing. I'll be checking the shorter time frames. And if I see, let's say, even the 1 minute or the 5 minute get a little rejection along this box, then I would be interested in shorting SUI again. Let me just catch up on the chat a little bit, guys. Hopefully you're all having a fantastic day. Guys, if you do appreciate my level-headed approach, whether you agree with me or not, it's always good to get a second opinion. And if you appreciate the way I can look at it without an emotional bias and just showing some of my favorite trade strategies and how I look at structure and all that sort of thing, if you appreciate it, do me a favor, hit that like button, subscribe to the channel so you don't miss these live streams. Again, if you want to see more of how I'm looking at structure, just keeping more up to date with how I'm looking at the markets in general, do yourselves a favor, scan that QR code or click on the link and follow the descriptions or follow the steps in the description down below. If that's something that interests you. Like I said, my followers get special discounts or special deposit and trade volume bonuses and that sort of thing with BloFin, and as well just showing some of my analysis, some of my trade setups, my thoughts on the market in general in there. So with that, let me catch up on the old chat here. Let me see. I can throw on an indicator to nations. So on the way up, we've formed a lot of support with the AI charting tools indicator. So we're going to see if we start getting some red blocks above us. That would be a nice sign for the short as well. How are you all doing today? And how are you all feeling about the market? I know it's been absolutely crazy times. I know that everyone's emotions are on high. I know everyone's trying to catch an edge by figuring out what the heck's going on in the economy. Honestly, if you're trying to trade news or tweets or anything like that, you're probably going to get wrecked. I just like trading the charts. I know a lot of people say that, oh, the charts couldn't predict any of this, that this was all due to tweets and tariffs and that sort of thing. Guys, I have been warning about this potential bearish downturn since December 23rd. I got very vocal about it at the start of January. I was calling for January 20th to possibly be the top inside of a Stuber fib. And that actually ended up happening absolutely perfectly. If we pull that bearish fib that we had there, notice that this peak here was January 20th. That is where we topped. That was a Stuber fib setup. If you played it, you would have got all 3 entries, something like that, and you would not have hit your invalidation. So played out absolutely perfectly there so far, right? Either way, I have no regrets about flipping bearish at that time. If we end up going and setting new highs now, great. Then my spot positions can finally recover. I would love to be a moon boy again. It's just that I still have my concerns in this market, which for obvious reasons, right? Even as we're finally getting to this resistance right now, you can see that it's an obvious level that there's an obvious reaction at this level, right? No matter how you look at it. Oh, there's a nice red box there, like I was saying. So the bears are trying to push to the downside a little bit. We break and hold 88. It's looking pretty good. I still think we would want to break at least 88.8, but honestly, there's still that wiggle room for a liquidity grab up to about 91, I would say. I would want to see 91 broken to get quite comfortable. Other than that, even if we just got a little break above that 88.8, even if it was a swing fail, I would at least be looking at a deeper pullback again before setting new highs. But happy to be wrong. I would love if we just blasted right through all-time highs and went on an absolute moon mission. I just don't know how. I don't know if it's going to happen. We'll see. But yeah, if we can at least break this downtrend on the 4-hour, at least there's something going for the bullish structure at that point, right? I know I've been basically a perma bear for all of 2025, and I know a lot of people are sick of it. And trust me, I will be a moon boy again someday. I love crypto. I use crypto every day. I trade crypto every day. I love it. And that's honestly why I'm okay being bearish on the price, because I would love to get a bear market again and be able to load up again, especially if it was just a short one. Let's just say we got a bear market movement, but it happened quick, some sort of a capitulation. I would love for that to happen. I don't know if I'm necessarily lucky enough, but that's why I'm okay. And that's why I sound happy when I'm talking about the bearish scenarios and stuff too, guys. It's not like I'm sitting here thinking, haha, screw everyone, I'm glad everyone's losing money. No, it's that I actually believe in my investment and I have no problems if it ends up going lower. I'd be excited to buy it lower. Oh, I just noticed that I had questions about, yeah, how do you feel about the monthly? Well, I just went over that. Yeah, the monthly, honestly, my big concerns in this market is the monthly chart at this point. Share my Wavemaster settings, on which I guess I don't know. I just have them on default, I'm pretty sure. Signal mode harmony. But yeah, other than that, just basically out of the box. Do I ever wonder if the previous data is invalidated after the ETF and nation state happenings over the past couple of years? Sometimes I wonder if the 4-year cycle is kind of dead after these things have happened. A little bit, yes. Honestly, the way I see it, basically, I think we're at the mercy of the rest of the markets at this point. Everyone was very excited about big money getting into the space. Big money literally said in like 2017, they were coming and they were going to tame the price of Bitcoin. They were going to tame the crypto market. And everybody was celebrating that bigger players were getting in the space, but that means that they are going to have the market moving like a much more rational market rather than the type of market cycles we used to see. And that ties into the whole diminishing returns, right? There's always bigger players, bigger money, less volatility, all that sort of stuff. So yeah, the market cycles may end up being completely different now. We have to see, right? I'm not much for time analysis, honestly. I'm more of structure and indicator signals, trends, that sort of thing. I kind of look at the timeline a little bit, and that's honestly the one thing that is still also holding me a little bit bullish right now, is just that I felt like there should be another half year to a year of this bull market. It does seem like it's cut a little bit short, but that being said, compared to last time, last time there was an election, because usually it's after the elections when crypto goes nuts, right? That kind of lines up with the 4-year cycle. But things on the global scale are being done basically the opposite right now in the economy. There's, rather than a ton of printing and give outs, handouts, that sort of thing, there's a lot of cutting happening on things and a lot of uncertainty and that sort of stuff. So it's tough to say, but I try not to look into fundamentals too much. I try to mostly focus on the charts. So my big concerns are just basically that, for one, like I said, this monthly chart, we lost that order block. We have a massive engulfing bearish candle. We even ended up testing that old support block as new resistance. I can even get rid of this red line here so you can see it more clearly. We basically wicked into that box perfectly. Yeah, there's just so many signs. Well, 3 signs, I guess, but that's a lot of potential bear market signs on this chart, if you ask me. So yeah, I've got my concerns about the monthly chart still. I would love to be proven wrong, right? That's the thing, guys. I know a lot of people, when they hear me say anything bearish, that means that if we go to all-time highs, that means I'm getting liquidated, I'm getting wrecked. It's nothing like that. My wallets will thank the markets for me being wrong, and my spot positions will recover, and my portfolio will recover, and that will be great. And I will start trading the long side instead, and I'll be longing pullbacks with Stuber fibs rather than shorting the bearish Stuber fibs, right? That's all that's going to change if the market ends up reversing my theories, basically. From now on, only up 100x, 100% margin. Go, go, go. Love the attitude. Don't necessarily agree with it, but love the attitude. See, but you know what? Honestly, that's the problem, is a lot of people feel that way right as we trade into resistance. That's why super fib pockets are such good bull traps, as well as bear traps. is because as you're trading into resistance or as you're trading into support, that's where, the price looks strongest at resistance, even though that's where typically you're should be selling resistance, buying support, but emotionally it looks the opposite, right? So a lot of people do actually have that mentality of, hey, we're looking strong right now, time to all in, start longing absolutely everything right now. Now that we've bounced a bunch, it's time to start longing. That's not necessarily correct, right? Because we are, even if we end up breaking out right now, it's still not a good decision in my eyes to start longing into resistance. I would always rather be looking for shorts at resistance. Yeah, we will never see 70K again. Sell your house and go 100% margin long, get rich quick. Yeah. Yeah, that's how a lot of people feel, right? And that's the thing. Although, yeah, maybe we never see 70K again, but if we end up in a bear market, I damn well, you're damn right, I think we'll see below 70K again someday, whether that's now or months down the road, whatever. But yeah, a lot of people do have that mentality, unfortunately. Can I teach you a little on my fib and the settings? Well, in my Telegram channel, I do teach about my Fibonacci's, how I pull them, all that sort of thing. There's actually even a couple of videos that I've made specifically talking about this strategy. A couple of them are posted on the Financial Summits YouTube channel here. Stuber Fibs here is basically my intro video on Stuber Fibs. Also, guys, recently I did make a little bit of a BloFin tutorial just talking about leverage, risk management, order types, and that sort of thing, because I talk about different order types and that sort of stuff in my Telegram channel from time to time. So yeah, do yourselves a favor, give that a quick watch. It's a short video. It's only like 15 minutes or something. And I know a lot of people haven't done much trading on leverage exchanges, so I just wanted to clear up a couple of things there. But that's a public video. Those are both public videos. There is a more in-depth Stuber Fib video where I really break down the foundation and the structure of pulling Stuber Fibs and that sort of thing. I do have a more in-depth one, but that's for people in the Telegram channel only. And for those of you who are in the Telegram channel, that should be one of the pinned messages. There should be a few videos in there for you. Yeah, so the public one is shared in the chat right now. Thank you to the producer. Yeah, so starting to see this little push to the downside, guys. So like I said, if you're taking shorts, especially depending how much leverage you use, like sometimes when I'm looking at these trades, when I'm trading the shorter time frames, I do use pretty high leverage. So just understand that the markets are also quite volatile right now. So one thing that I've actually done recently, since we have been so volatile, is I have toned down the leverage that I use. When I'm usually using like 69x or 50x, for example, I'm now using more so like 25, 20x, which is still honestly probably more than most people should use. But that's something I kind of talk about a little bit in the risk management and the leverage side of things of that BloFin tutorial. Because having an understanding of your position sizing and that sort of thing is really what matters at the end of the day. So anyways, guys, I think that's about all I wanted to go over today. So hopefully you guys found this stream useful. If so, be sure to hit that like button and subscribe so you don't miss these streams in the future. And as I mentioned, if you want access to my private Telegram channel where I share some of my theories, some of my trade setup ideas, just my overall thoughts on the markets in general, there is the QR code on the screen and also a link down below with the steps to join in the description there as well. With that, I'm out. Thanks so much again, my friends, for joining here, being here with me. Hope you all have a fantastic rest of your weekend. With that, I'm out. Stay safe, my friends. Peace.